Joining us now is the founder of QuantmRE, Matthew Sullivan.
Thanks so much for being here today, Matthew.
Thank you for having me. It's a pleasure to be on.
Yes, so returning champion to the show. So a lot's been going on since the last time we talked to you. I think it was at a meetup. But before we get to all of the big news, why don't you tell everybody how exactly does QuantmRE go about tokenizing residential real estate?
Well, what we do is we help homeowners release the equity that's tied up in their homes. And what that does is that creates a real estate asset. And in order to enable people to invest in that asset, we put it into a real estate investment trust structure. And rather than issuing shares, which are traditional securities, we issue tokens. And those tokens can then be traded on platforms nationally and internationally. So if you go through that process, the token represents ownership in that pool of equity interests in single-family homes.
You know, in many of our interviews, you've often mentioned the phrase equity freedom. What does that phrase mean?
It's something that really bothered us because as a homeowner, having spent years paying off your mortgage, to be able to go back and have to go to a bank on bended knee to borrow money to release some of the value just seemed to us to be an entirely inappropriate way of releasing the equity that's locked up in your home. So the concept of freedom really just emerged out of when we were discussing what we were doing, trying to find words that describe what we're doing. And freedom was the most appropriate word because it's the freedom of having to be tied up with banks and having to go back and borrow money. It's freedom to spend the money on whatever you want. And it's really the freedom to use the value that you've built up over those years without having to take on additional debt or have those monstrous interest payments every month.
Yeah, so you guys recently announced that you're partnering with Securrency to accomplish a whole bunch of things. Can you tell us a little bit more about that partnership?
Yes, now, securities is a rather complicated business.
Yes.
And we went into this with our eyes open. So, on the team, we have a number of highly experienced people in securities and real estate. So none of this was a surprise to us. But effectively, what we're doing, along with many other people in the securities space, is building a parallel securities environment. We're not trying to replace the existing $69 trillion global stock market. But if you were ever going to build a new settlement system and a new securities system, you'd probably build it on blockchain. Now, in order to do that, we need partners. We can't do all of it on our own. And Securrency provides us with some critical components that enable our tokens to trade and move from owner to owner globally in a compliant way. So that's a massive undertaking. So we're delighted to be working with some of the smartest people that I've met to help us achieve that objective.
Yeah. Are you familiar with their structure that involves a stable coin in that process? Are you familiar with that?
Yes. I mean, these are some of the smartest guys that we've come across.
We've had them on the show. We love them. Yeah.
And it is just the mechanism of changing and swapping dynamically one token with another token happening at the speed of light that enables you to be compliant in one jurisdiction, and then if you sell in the UK to a US person, being able to dynamically swap those tokens behind the scenes. There's some really smart technology there. So we're using that technology. They help us get to market, and that's really the benefit of that true partnership.
Wow.
Yeah, absolutely.
Very complex, very difficult sounding. You're also partnering with Prime Trust, which is a custodian, and the reason for that is so that your investors can buy security tokens without needing a digital wallet. Can you tell us a little bit more about that partnership?
Yes, one of the main reasons we're partnering with Prime Trust is to solve one of the biggest challenges as an owner of cryptocurrency. In other words, where do I put this stuff? If I own cash, it goes in the bank. But if you're an institutional investor or any type of investor, in order to be able to buy a tokenized security, you have to set up a wallet. You then have to become involved in all of the security issues associated with that. Now, you don't need to do that in the traditional world with shares because you have companies like Prime Trust that hold the shares for you. So what we're doing is we're really simplifying the process, and we're applying methodologies that are used in everyday securities. And thankfully, Prime Trust are at the forefront of these types of developments, and they've created a system that allows our investors to hold their shares in a regulated, insured custodian account. So they don't have to worry about the security issue of finding their own wallet.
That's great. Okay, so let's talk about this, the STO
Yes.
per se. It's now live.
Yes.
So who's able to invest and how much are you trying to raise?
Any accredited investor based in the United States, as part of phase 1 of our platform.
Okay.
So, and the reason there are a number of phases is we're working in conjunction with the SEC, and there are various rules that obviously we have to adhere to. That means that there's a stage process. So today, any accredited investor in the US can go online, can go through the process, and they can buy EQRE, which is our asset-backed token. We have our Regulation A+ filing with the SEC. It's been cooking there in the background for the last 2 months. So as soon as that's qualified, any non-accredited investor can also participate. And between those 2 dates, we'll be opening up the market to non-US persons. So we've got a few challenges that we've set ourselves over the next few months, but there will be this cascade of opportunities for people around the world to be able to buy into this asset class with what we hope will be a liquidly traded instrument, which will be our asset-backed token.
So you are primarily working in the single-family residential real estate space.
Yes.
What makes that space so prime for investment, and how does all this differ from commercial real estate?
For a start, residential real estate is a huge asset class. So there's over $32 trillion worth of single-family owner-occupied real estate in the United States. It's also an asset class that's very well understood. There's a number of indices like the Case-Shiller Index that report on the movement of house prices. And also it's an asset that people understand themselves. You know, I live in a home. From an equity perspective, nearly half of that $32 trillion is in equity. So there's over $15 trillion worth of equity that's locked up in people's homes. So for a start, there's a big enough asset class to keep us busy for some time. Secondly, most importantly, is scalability. In any commercial deal, it's very difficult to get good quality deal time after time after time. The smaller deals tend to be lower quality, and you have all sorts of issues with adverse selection. In other words, is this a great deal, or am I just doing it because I've got so much cash I need to find a home for it? The thing with residential properties, with the way that our contract works, is that we can crank the handle and literally have house after house after house coming through our process, where each one of those deals, having gone through an origination process, is a high quality deal. Because we don't need to find $10 million or $100 million investments. We can put $100,000 here or $200,000 there, and it represents an interest in a performing asset. So scalability is critical. It's ideally suited to us in that respect. And also, there's the social impact. In other words, let's do something that actually creates a movement, that creates this freedom for people. So single-family equity solves all of those problems and achieves all of those objectives for us.
I've had some question when I've talked about this, as you know from the past. This has always been one of the things, like, when's someone going to do this? When's someone going to do this?
Yes.
But I think when I talk about it, we use the term shared equity release, right?
Yes.
So people ask me, how is that different from a reverse mortgage? Can you speak to that?
Yes, the fundamental difference is there's no debt. And people view debt in a number of different ways, and debt is a very useful thing as part of the overall economy. But most people, if you ask them the question, is debt a good thing? The overall answer is there's no such thing as good debt. So if there is a way of helping people take some chips off the table, take some value in their home without adding a debt component, then that's the optimal solution. Now, a reverse mortgage is a debt mechanism. So what it does is it defers the debt. The debt is still ticking away there in the background. You're still adding interest, but it's being hidden. It's accrued. It's you don't have to pay it. It's buy now, pay later. It's that scenario. But with our program, with equity release, you're simply selling something that you already own at today's price. So that means you're not adding debt, and that factor makes it so different in terms of how it's viewed by people. In other words, I don't want to take on more debt. Well, in our situation, you don't have to. And that's the fundamental difference.
So can these homeowners actually one day be able to buy back their shared equity?
Yes, they can, absolutely. So what we don't want to do is put a homeowner in any position where they are worse off because of what we're doing.
Right.
Now, for us, we run a business, so we're saying we're giving you some money in exchange for an asset. But obviously, if you want to buy that asset back, you're able to do so as long as we don't lose out. So there's a minimum period. So if you pay us back within the first 2 years, we fix the price, which is there's a 10% prepayment charge to you. But any time between that period and 30 years, so you've got 30 years to either sell or refinance your home. You refinance at the market price, and we decide that market price by sending an appraiser.
Interesting. And so let's say that a home actually sells for a profit. What percentage does QuantmRE take?
So we take it's a calculation that's based on the percentage of the value of the home at the time that the contract is written. So for the sake of argument, if you have $1 million home and we buy $100,000 worth of equity, that represents a potential future appreciation, but it's 10% of the value of your home. So that $100,000, we write you a check for $100,000. We take that asset. When you sell your home, let's say you sell your home for 1.1 million. When you sell the home, $100,000 of the sale proceeds comes to us, so that pays us back. We then take 2.5 times the percentage that we originally released, so that's 25%, and we apply that to the increase in value. So if your house has gone up by $100,000, we take 25% of that $100,000. So our return is to get our $100,000 back, plus our profit is that $25,000. So that's our return on investment because we're sharing in the property. If you sold your house 5 years later and it didn't go up, we don't make any money. And that's another real difference between what we do and debt. So that it is a real partnership.
Got it. So what's the responsibility of the homeowner to pay the property tax and maintain the property on their own? What happens if, let's say, the owner is negligent and doesn't fulfill?
Well, we're partners. So we start off as silent partners. Now, if a homeowner stops paying the mortgage, stops paying the property taxes, effectively puts our asset in jeopardy, we stop being silent partners. And we start saying, look, as part of our agreement, we're actually co-owners. Although we're not owners in your home, we have a shared interest in your property. So part of the agreement is that you have to keep up these payments. Now, things happen to people, and we will understand that circumstances change. So we have the right within our contract to be able to step in and help you out. So if you're running short of capital, maybe we can help you release more equity that gets you over that hump. If you're really in dire straits, maybe we could help by taking over the mortgage payments whilst you're trying to find a buyer at a market price rather than having to sell your house at a much lower price. So there's a number of protections that we have that are built into the contract, but it's up to us to decide how we apply those, and every case is different.
Very interesting. So, I'm an attorney, so forgive the morbid question, but it's when I have to ask, right? So what happens if a homeowner dies?
That's an event that triggers the close of the contract. So in other words, at that point, the contract terminates as if it was sold, and we send an appraiser, and as part of the normal process, houses are normally sold as or they change hands. So we do, and this comes from the experience that the team has over the last 10 years of originating over 300 of these transactions. So we've been through all these different scenarios, and the best scenario for everyone in terms of clarity is to say, if there is unfortunately a death in that situation, then let's try and have a clean break, and obviously we'll try and assist you as far as possible in that process.
Fantastic. Well, Matthew Sullivan, CEO, founder of QuantmRE, thanks again for being with us. We wish you guys the best of luck. You'll have to come back, tell us all about how the STO is going.
Adam, thank you for having me on. It's been a pleasure.
You can find out more information on QuantmRE on their website, QuantmRE.com.